Well, hello and a very warm welcome to this webinar, Outlook for Italian Banks. Another strong year ahead, brought to you by Scope Ratings. My name's Keith Mullin, and it's my pleasure to be your moderator today. Now, as many of you will know, Italian banks had a record year last year. The Scope view is that revenues will continue to support net interest income and higher fees. At the same time, operating costs and provisions remain under control. But there are some downside risks. So what does lie ahead for Italian banks? To take us through this topic, I'm delighted to be joined by Alessandro Boratti, Scope's lead analyst on Italian banks. Now, in a second, Alessandro will take us through a short presentation, and after that, he'll be delighted to take your questions. So please do type these into the questions tab as we go along. Now, before I hand over, I just wanted to draw your attention to Alessandro's Italian Bank Quarterly that was published recently. This is available on the Scope Ratings website, but for convenience, we'll make it available today for download. So I'll give you the instructions at the end of the session. So that's it from me. Alessandro, great to see you as ever. Let me hand over to you.
Thank you, Keith, and good afternoon, everybody. So I would like to start my presentation by looking at last year's results first. The strong performance of Italian banks was driven mainly by two elements. The first one was the sharp increase in net interest income on the back of higher policy rates and the low repricing of deposits. The second factor was the declining cost of risk thanks to a strong asset quality trends. Now, if we look at the right at our sample of banks, we see how return on equity was higher than in the previous years. So this has been a very strong year. And with that in mind, we look at 2024. So we entered this year from a strong standpoint, and we will look at 2024 as a year, it's going to be a different year from a monetary and macroeconomic standpoint. The main difference with 2023 will, of course, be the rate path. We had the increase in rates in 2023, and now we have a decline starting perhaps most likely from the second part of the year. And Scope expects the policy rate to be around 3% by year end, and this is broadly in line with market forecasts. On the right, instead, we see the economic growth forecast for Italy, and we see how forecasts have worsened over time. We see Scope being among the least, let's say, or the most conservative, if you will, players out there, forecasting at 0.6% for the Italian economy in 2024. So this is, of course, in this scenario, we expect revenue growth to halt and perhaps to decline from the 2023 level. Of course, there will be the drag from the policy rates waiting on net interest income, and this, in our opinion, won't be counterbalanced by the increase in fees. At the same time, we expect a slightly increase in cost of risk due to higher defaults. So all in all, still a strong year, but less, let's say, the earnings will be lower, in our opinion, than in 2023. Moving on to asset quality. So banks have done a lot in the past years on asset quality. They have improved their balance sheets. Also in 2023, we had a decline in both the stock of NPEs and also the NPL ratios. Nowadays, banks entered this year from a very strong position, and they're ready to face a different scenario that sees a pickup in default rates from their bottom as the high borrowing costs start having an effect on the economy and borrowers in solvency. Now, we need to be careful about this. We are not expecting a wave of defaults. What we expect rather is a slight decline, a normalization, I would say, of default rates. But banks are not only don't only have much cleaner balance sheets than before, but have also improved their origination standards, their management of loan positions, and supervisory framework has also strengthened over time. So we see banks well prepared to these new asset quality trends, and we don't expect a massive deterioration in asset quality metrics. Now, on capital. For capital, we forecast a pretty much unchanged picture in 2024. So we will have earnings that will remain at a high level. We said not at the same level as last year, but still a quite important level that will continue to sustain a bank's capital ratios. And at the same time, we will have erosion. The opportunity for capital growth is for asset growth and risk-weighted asset growth will remain limited. So there will be upside pressure on bank's capital ratios. This will, of course, be offset by the ongoing dividend plans and very generous dividend plans put forward by banks. In this context, we will have, we think, a growing, let's say, a supervisory, more and more careful about banks' capital distribution plans. We have heard the Bank of Italy just a few days ago announcing a public consultation on the possibility to introduce a 1% systemic risk buffer on credit and counterparty risk. And this, in our opinion, highlights the supervisory stance in this situation. So they really want to increase, let's say, the buffers now that the situation is, let's say, now that the scenario in terms of profitability is very benign, facing more uncertainties going forward and the possibility of unexpected shocks. On funding, 2023 have seen a normalization in funding conditions with the beginning of the repayment of the TLTRO3, and we expect this trend to continue over this year. Banks will have to repay in full their TLTRO3 outstanding, and TLTRO3 will be either partly or in full replaced by interbank loans, by higher wholesale funding, by asset securitizations, and we'll see also a slow movement of deposits from current accounts from time deposits. This trend started already last year for some banks more than others, but we see that banks have started from a very high proportion of current accounts compared to other countries. And so actually, this also explains why the deposit beta has been so low in Italy compared to other countries, because of course, current accounts are not remunerated. Their remuneration didn't change with the increase in policy rates, and so the effect on the total deposit rate was very limited. So in a nutshell, this is our view. We remain constructive for Italian banks. We see, as I just said, profitability being still high, and capital position also remaining at a high level. Then on asset quality and funding, we see rather than a deterioration or a weakening, we would rather talk about normalizations in conditions, and that's why we have put, let's say, a downward arrow, just to highlight that this could be, let's say, this could be high areas of where there could be some pressure, but starting from a very, very strong position. Last slide is on our, let's say, upside or downside potential to our base case forecasts. Some of these, let's say, risks are quite standard, I would say. Of course, better or worse GDP growth for 2024 will have either a positive or negative impact on banks' profitability. Then we've had mentioned the possibility of a postponement in rate cuts to 2025, something that is now really not the base case, but that should be the case. Of course, there could be upside potential for the bank's net interest margins. And looking at the downside, I would still mention the possibility of new government measures targeting extra profits for banks. We must remember that in 2023, the government didn't raise any money from their tax, so there could be, this is just a speculation, but there could be risks there. We have then the possibility that the ECB increases the minimum reserve requirement. Again, this has been actually ruled out for the time being in yesterday, but it could be different going forward, maybe in the second part of the year. And also, we'd like to highlight that there's still some risk on the sovereign side. Again, the spread has been actually declining over the past months, and this is, of course, positive for the Italian economy as well as for the Italian banks. But we still see it as a potential source of risk in a situation where we have the government, the ECB shrinking its balance sheet, and the government having to tap the market with very high elevated financing needs. So this is another, let's say, thing to watch out for 2024. So I would stop here, Keith, and I'm open for the audience questions.
Very good. Thank you very much, Alessandro, for that helpful and insightful presentation. Please do type your questions in now if you haven't done this already, and we'll now move to our Q&A session. So Alessandro, I've got a variety of questions here, so we're going to jump around a little bit, so I hope that's okay. But you mentioned TLTRO3 repayments. Just curious, so first of all, can you say how much is actually still outstanding from the Italian banks? And I guess more to the point, do you see any potential hurdles for any of the banks to repay their drawdowns?
So I think the latest data point for TLTRO outstanding showed a figure of around, I think, 150 billion, 140 billion outstanding, which we're talking about 35% of the total take-up from Italian banks. There is a big deadline coming up in March. Look, I think banks must be prepared for that. They have had so many months to prepare for this kind of deadlines. To be honest, so far the repayment of the TLTRO tranches have gone quite smoothly, and there's little reason to think that this will change in 2024. I think the big risk on the funding side is always when you have either a sudden decline in deposits or I don't know, sovereign risk spiking. So I don't see much risk, and this is particularly true among the largest banks that have higher reserves with the central bank than the TLTRO outstanding. For smaller banks, instead, we think that they might have to resort to wholesale funding, to asset securitization, or to shrink their balance sheets to meet their deadlines.
Okay, that all sounds reasonable. Now, you talked in your comments about the consultation that the Bank of Italy has initiated around this 1% systemic buffer. I think you kind of answered this, but can you just talk about whether you think that's negative or positive for banks?
I think it's positive for banks. First of all, we must say that it's a 1% systemic risk buffer on credit and counterparty risk. So we are talking about, then it depends on banks, but it's also, first of all, on the Italian perimeter. So for the largest international banks, this is diluted, of course. And then it depends on the bank's risk-weighted assets mix. But all in all, it's considering the buffer that banks have in terms of capital. This is a low cost measure because it doesn't change very much how banks will manage their capital in 2024 or 2025. It might be, let's say, it might push bank managers to increase the, let's say, the internal buffers, and so in terms of distribution, this might force some banks to avoid increasing even further their distribution plans, but it won't change the current dividend plan. So all in all, I think it's quite positive for the sector, for sure, from a credit perspective.
Okay. Thank you. Now you talked about the Italian banks' capital positions and the fact that I guess like banks throughout Europe, Italian banks do have excess capital relative to regulatory requirements. Now, when you talk about excess capital, I guess credit investors have a slightly different perspective from equity investors. But perhaps from a general perspective, what could the banks do with their excess capital? And why don't they actually increase distribution?
Look, excess capital is a function of low capital usage in the sense that there is a limited scope for organic growth. And at the same time, you have a strong profitability. So you have a pressure, as I said during my presentation, on capital ratios. And most of the time, banks, what they can do is just returning this capital to their shareholders. Now, we think that banks won't shrink their excess capital right now that supervisors are so, let's say, so careful about the uncertainties going forward. I think banks will continue to maintain these buffers, also because they need to compare themselves to the foreign players, the international players, with perhaps barring the Spanish players. They all keep high buffers over requirements. So it's a new standard, let's say, to keep these buffers. And as long as also there are no main big M&A possibilities, I think they will maintain these buffers.
Yeah. Okay, that's a fantastic segue into the next question, which is a perennial question that is always asked and beloved of analysts and media. Do you think there'll be more Italian bank consolidation this year or even next year?
So for sure there will be consolidation going forward. Not sure about 2024, but looking in the medium term, the Italian banking sector is one of the most fragmented around Europe. And there is a lot of scope for consolidation, especially among second and third tier banks. So I believe that, that there is for sure room, although as of today, let's say opportunities for bargaining, for acquiring banks at a bargaining price has shrunk due to raising valuations. We've heard also bank CEOs talking about that in the past weeks, and so it's difficult really to find the right bank at the right price, and banks need to find their targets at the right price for a valuable, how can I say, for to meet their cost of equity. So not sure there will be the right year for 2024, but I might be wrong. I mean, I don't have the crystal ball. I think I will see going forward, but for sure there is scope for consolidation in Italy.
Perfect. All right. Thank you. And just moving across to lending. Now, this is, I guess, a European phenomenon that higher rates obviously benefit banks, as you said at the beginning, but they also have perhaps an impact on credit demand. And in fact, loan volumes in Italy contracted in the past year. Do you see that picture changing in 2024?
Well, I mean, you're right. It has lending has declined in 2023, and yeah, it could rebound slightly in 2024. But we see still with such a high rates, at least higher than in the past decade, pressure on downward pressure on lending. In fact, the latest lending survey points to just a slight pickup in the first quarter of 2024 in corporate lending, whereas mortgages and commercial and consumer loans demand remains pretty much subdued. I don't see much scope for a high growth in lending in 2024, to be honest.
Yeah, okay. That makes sense. Now, at the very beginning of my comment, and in fact, during your presentation as well as net interest income, Italian banks have seen higher fee revenue. And in fact, banks are pretty kind of upbeat about the prospect for fee revenues. Can you talk about that aspect of the revenue pie?
Okay, so in fact, fees have declined in 2023. They've been, at the end, they are a function a bit of interest rates as well. So, of course, the higher interest rates is positive for margins, but it affects other banking businesses or ancillary businesses, and negatively impacts fees. So, for instance, higher rates is not positive for asset gatherers. Now, we believe that banks have invested a lot in the past years to boost their capital-light businesses, and so this should provide some benefit on their fees going forward. So we see some upside on that. Now, as long as the rates remain at 4%, there will remain some pressure on fees, especially thinking about the competition from BTPs for retail customers, for instance. The decline in interest rates starting from the second part of the year could really push up banks' fees. So all in all, yeah, perhaps there will be upside. We still see, let's say, the mix effect of lower interest income and higher fees leading to a lower revenue on balance. But we will see then what will be the result.
Okay, just if I may, you mentioned these retail government bonds. In fact, you published a short commentary yesterday, which was about about deposit and there was a BTB retail issue earlier this month, which is very successful. Just in a very general context, general sense, does the government start to become a competitor to the banks in terms of deposits versus these financial investments?
Yes, because high yield bonds are, of course, very attractive for retail customers. So they are, and of course, every time the government launches a program to gather money from retail customers, deposits decline, retail deposit decline. Now, the factor here to bear in mind is that banks started this let's say this cycle with a lot of deposits accumulated during the pandemic, and so it hasn't been really an issue so far. It's clear that going forward with the repayment of the TLTRO and with higher funding costs, it might become more advisable, say more profitable to keep these deposits. And so, of course, it will be more and more expensive for banks to keep them. The competition for the government won't be, let's say, favorable in a certain sense for banks.
Yeah, no, absolutely. You talked about asset quality as well in your comments. Can you talk about any particular pockets of risk in this area? And could you also perhaps reference commercial real estate, which is a topic of the day at the moment everywhere, it seems, in the context of Italian banks and the Italian market? Have there been any kind of signs of stress?
No, in fact, banks have been quite silent on asset quality, or rather on specific sectors that could be affected by that could be impacted by rates and by insolvencies. The truth is that, I mean, there's been this catalyst of higher interest rates that, of course, have an impact on asset quality. But then you have the economic growth, which is positive, of course, mild but positive, and strong employment. So at the end, this has had a positive effect on loan performance, and there haven't been impacts on asset quality. I would say that companies most leveraged could start feeling the cost of higher interest rates. But otherwise, for the rest, there aren't specific sectors that I would pinpoint here. And with respect to commercial real estate, it's the pure commercial real estate is a much smaller market in Italy compared to Austria, Germany, or the Nordics. And there haven't been signs of deterioration. Prices have gone down a lot since the global financial crisis. So there isn't the sector isn't heated as in Germany or in Sweden, for instance. So all in all, I think that the situation is quite under control for Italian banks.
Well, I've got a question which I guess is going to require. I'm going to put you on the spot a little bit. It's one of those unanswerable questions. So if you cast your mind back a year, pretty much to the day, we had pretty significant turmoil in the US, Credit Suisse market, something that the wholesale funding markets closed. There was a lot of speculation about the impact, this domino effect that was going to completely, tear through the European banking sector. Now, of course, that didn't happen. But when it comes to Italian banks, I guess in a general sense, all banks did, but Italian banks did cope well with the turmoil last spring. So the question is, do you think that Italian banks are more resilient now to these kinds of shocks?
I would say that the fact that they are mostly deposit funded and funding that is coming from mostly from, let's say, SMEs, retail customers. So it's kind of granular, protected by the guaranteed deposit guarantee, is for sure an element of strength for the Italian banking sector, and also a differentiation element for banks in Italy. Now, we need to be honest with ourselves and also say that perhaps last year's turmoil didn't really breach into the Italian banking sector, and so we cannot really say. We cannot really say that banks really tested this kind of situation, so they were quite shielded from that. So yeah, this is what I would say.
Yeah. Okay. Well, so we are going to finish in a second. So if you have any final questions, can you put them into the platform now? Otherwise, we'll come to an end because I have no more questions, Alessandro. So I think you've answered the ones I did have extremely well. So thank you very much for that. And so while you are thinking of your final questions, let me just tell you how to download, as I mentioned, the quarterly that Alessandro published recently on Italian banks, and in fact today's slide presentation. So if you go to the bottom of the screen, you can go to the apps, and then it'll actually, let me just, apps, that's right, it's apps and then handouts, and then two files will appear, which you can click on the download button to grab. So please do that and give the quarterly a read. It's well worth it. And so, look, there are no more questions. Let's actually close the session now. So, Alessandro, thanks very much indeed for your time today and for your comments. Thanks to you for watching. The quarterly, by the nature of these things, will come out. We'll do another one following the Q1 results at some point in the spring. So look out for that. And as and when appropriate, we'll come back and do another live session with Alessandro. So that's it from us. So it's goodbye and have a great rest of day.